All right, what's going on, guys? Tremaine here, the most disciplined day trader on YouTube. Looking for lower prices here in NASDAQ. And let's clear some of this off. We traded into that up close candle on the daily chart. So I'm expecting some sensitivity there. I did take a loss earlier this morning, just one and done. So looking to recoup that. That loss in the morning session was about $700 or so. So very minimal in relative to my account size, but London closed macro 1050 to 1110, especially if we had a lot of movement in the morning in one direction. So in this case, we had a lot of movement higher going into that 11 o'clock London close. So that 1050 to 1110 macro, I typically always expect some measure of retracement or just a full out reversal. So we've traded into that up close candle on the daily chart. I'll show that towards the end of the video. And if I put the quadrants back on there, so we have the lower quadrant of that wick on the daily chart, the midpoint, and then the upper quadrant. I like how we ran up, failed to reach that upper quadrant of the wick, and then we displaced lower, leaving a fair value gap. I like that. If you're in the Discord, that's something I outlined in yesterday's market review when we failed to reach the upper quadrant. What was it? We did two things. Yesterday, we failed to reach midpoint of our opening range gap, and we said that was bearish. And then it was actually the 5-minute wick. So if you look at that market review, download the PDF, and look at that 5-minute wick I outlined and run your quadrants on it, we failed to reach that, and then we displaced lower. So I'm applying that same logic. It's just based on a daily interval, that daily wick. I like the bodies there. That's perfect. I do want to look to pyramid this and build it up. Right now I'm risking less than 1%, so I do want to add more. And there's too many lines going on, so I'm going to take those off so we can see what I'm looking at. I'm looking at this sell side as a potential draw. Everybody who's made money in the morning session, they're trailing their stop losses beneath that swing low and then this low here. So now I believe we're in that time of day where we can possibly see that get ran out. And again, that's your 1050 to 1110 London closed. We've also ran out some buy side. If you go to your NASDAQ 15-minute chart, Monday, 6 p.m. high, which is that forms that new day opening gap. We've ran out that buy side, and then we've traded into, and this is a 15-minute chart, Sunday's 9:45 p.m. SIBI, which is resting just above that buy side. I'll show all that towards the end of the video. I don't want to change screens and do all that now. We have nice relative equal lows here. If you go to like your 15-second chart, that's way too smooth. So I would want to see a lot of speed beneath that. I don't want to just see little wicks beneath the short-term lows. I would want to see it act as rocket fuel. So once we reach that, it needs to be aggressive, fast, and really just run against them. And I'm looking at that current week opening gap as a draw. Now my entry is based off of this inversion fair value gap. That's what I'm looking at. It was used as support here to make a higher high. So once we trade back to it, I'm trying to get my short inside of that inversion level. And there's a little volume imbalance, so I'm going to include that. And then I would expect us to get beneath it and use it as resistance. And if we get some meaningful displacement underneath these clean lows down here, then I'll consider trailing my stop loss down a little bit. But until we see that, I'm not worried about it. I don't want to get stopped out prematurely by messing around with my stop loss. Watching this order block, that last up close candle, and its opening price. So right there, I like the bodies, respecting the low of it. And the way I'm seeing this is we have a lot of sell side. Now we have like a triple bottom, and markets really like to leave that stuff in place. So let's say I'm offside and NASDAQ still wants to explore higher prices. I would still expect it to at least run out these lows first. And then that's when you can start saying, okay, if we run out this little triple bottom we have going, but it's just with the wick and there's no speed, there's no displacement underneath all this, then that's telling me, okay, I may want to maybe take a contract off. Maybe I want to maybe close the position altogether. But even if I'm offside and we want to make a higher high, I would want to see this cleaned up first before they do that. So drop down, disrupt all of this to clean. And then if I'm offside, then it will come from my stop. But the signature I'm looking for is I want to see a lot of speed underneath all of this here. And then should we get back beneath that inversion fair value gap, I wouldn't want price to revisit the upper half. Same thing as always. So if we get a closure beneath this here, the lower half, I would want that to offer resistance. I wouldn't want to see anything in the upper half once we leave this inversion fair value gap. Gonna take off the lower quadrant of this wick. I don't like having all this stuff on my chart. Really, the midpoint and the upper quadrant is what I'm basing my trade idea off of. Now, if we get beneath that inversion fair value gap and it doesn't run away too quickly, I do want to add another contract. I want to short one more, possibly using that inversion fair value gap as a catalyst. So I'm going to go ahead and get this ready, change that to 1, because I do want to sell one more. Again, I'm risking less than 1%, so I kind of want to build it up a little larger. Extend some of these through all of this. And I'm watching this opening price as well. The opening price, that whole wick that makes up that last up close candle is what I'm looking at. So a little bit of consolidation, but I actually like seeing this because my thought process now is we're building a fake bull flag. So we have this displacement here, then we go into a little bit of consolidation, and then average retail logic says they want to see another displacement leg that matches this here. what I like to see whenever we have stuff like this is we have that displacement leg, and then we have that consolidation. People see that as your typical bull flag setting up, but then I want to see us completely overlap it, kind of disregard that logic. So we're in that little quote unquote bull flag. I don't want to see displacement above that high. I want us to fade that logic because we're in the time of day, London close, where it's already reasonable to expect a retracement or reversal. And we're trading into a pretty impactful premium array on the daily chart, which is the wick that makes up that bearish order block, that up close candle. So I'm expecting this to pan out. And again, I'm still looking to add one more inside of that inversion fair value gap. If we can close past its midpoint or its low, then that'll give me confidence to trail my stop and then add one more. Now, normally I would like a partial at that new week opening gap, but it's really not enough range for profit taking, in my opinion. So I'm looking at that sell side as a draw. And then if it trades to the new week opening gap, finds some sensitivity there, and then knocks me out of my long, it's fine. I'll be risk free by then, or perhaps have a portion locked in profit. But I really like that sell side, and the logic is traders are trailing their stop losses beneath that low. So I'm going to have my trigger finger on the market sell button because I want to see, so that right there, that's perfect. Now if we can close beneath that and trade back up to the low end of the inversion fair value gap, I want to add one more. Once we tag that new week opening gap, should we do it? So I like that. If we tap consequent encroachment, I'm going to use that as a possible entry. Right there. Look for sensitivity. I would like to see a closure beneath it. But I think once we leave that inversion fair value gap, it may not give me an entry to, or excuse me, may not give me an opportunity to pyramid and add one more. It can really pick up the speed and just aim for that new week opening gap. So do I move my stop loss yet? No. Yes, we've taken out that clean triple bottom, but I want to see something a little bit more meaningful. I want a little bit more displacement. I want to see a nice close beneath this here. The fact that we ran out that triple bottom, came all the way back up, this tells me leave your stop loss alone and may want to work some more premium arrays. It's not done doing its business here. So my stop stays above the high. So we're in a little bit of a range, but I'm observing the PD rays and nothing kills the bearish bias, bearish narrative for me. I'm going to go ahead and just make this one line because the chart's getting a little busy. And we're just going to highlight the opening price of that up close candle. As a matter of fact, let's just, that SIBI. Just keep it very simple. But we're respecting that fair value gap. Up close candle here. We have some sensitivity. Up close candle here. We're still staying beneath this inefficiency. And again, the whole premise, the whole logic of the trade is NASDAQ did not have the willingness to trade to the upper quadrant of that wick of the order block on that daily chart. So that's already, to me, I see that as the algorithm is flipping its hand, that it's running out of steam, going higher. And then you combine that with the time of day, London close macro, everybody's making money on longs. So this is the time of day where you normally see those longs get punished. And we've ran out buy side on a 15-minute chart. So there's a lot of factors that I like for lower prices. Again, I'm still looking to add one more, but the ideal scenario is we close beneath that inversion fair value gap, because that'll do two things. That'll convince me to trail my stop loss down, probably not to break even, depends how much speed we get through that inversion fair value gap. But once we get that, I would trail it down, and then I'll consider adding one more. So that's how I like to pyramid. When I trail my stop, that's when I consider adding more, because you're reducing your risk with your stop loss. But when you add another contract, you're not really adding on more risk. So right now I'm risking around $900. If I were to trail that stop loss down, let's say to 400, but I add another contract, that may bump my risk back up to 900. So even though I'm adding more contracts, I'm never really risking more than what I initially put on. But your potential profit grows pretty nicely. So that's the displacement I like. And gonna add at that low end of the inversion fair value gap. And I'm gonna trail my stop loss down. Right about there, right above that fair value gap. So now I'm watching, can we remain in the lower half of that inversion fair value gap? And can we look for that current new week opening gap as a draw? And notice my stop loss. So now I added a whole nother contract, but I'm still risking $800. So I didn't incur more risk. But if you notice, instead of potentially being able to make $3,000, I can now make over $4,000 without taking on extra risk and whatnot. I'm thinking, because I did take that loss prior, which was about $700. I think it was like $720. So a partial, I may take one to recoup that. So let me see how many points is required. So if I want to recoup $720 with one mini, I need 36 points. 36 points, which is about here. So I think I'm going to go ahead and do that. That comes in at 63.50. We'll just do that there. Whoops, my bad. So that partial, should that get tagged, that'll recoup the previous loss. So I wouldn't require that sell side to get hit down here. Let me make sure that's right. So for my partial is set at 23,462. And then I'm adding, how many points was it? 36 points. So 462 plus 36, 498. Yeah, that's about right. Everything looks good. Now, should we reach that new week opening gap, that's when my risk will come off. We just fell short of it. Immediate rebalance. Again, I don't want to see, I like how on this candle we open, traded to the inversion fair value gap, failed to reach the high end of it. Next candle opens, trades to the low, and then we displace. NASDAQ as of right now hasn't shown any interest in trading to the upper half of that inversion fair value gap. So I feel comfortable now trailing my stop a little bit lower. Now, if you're new and if you're a little worrisome, I lost $720 in the morning. I'm up $1,300. I always tell people who struggle with holding their trades, if you're starting to feel queasy and you just, you're nervous or whatever the case may be, this is a time for you to close your trade and have a break-even day plus a little extra. All right. I've been doing this for more than 5 years now, if you're including my Forex days. Red days don't scare me. Losing trades don't affect me. So I'm willing to not close here. Now, that's something I used to do in the past. If I had a losing day or if I started the day off in the red, my second attempt, if it's panning out and I'm already up more than what I lost, I'll just close it. Like, I lost 700. Okay, right now I'm up 1,000. I'll just close, even though it didn't hit my targets or anything, because I'm just scared to have a red day or I'm getting uncomfortable in this trade. Then just close it. But as time goes on, I've grown more and more comfortable just letting the trade do what it do and accepting the fact that if it does come back for your stop or your break even or whatever the case may be, it's no big deal. The risk is managed. There's always another trading day. It's not the end of the world if it comes back. But I want to give the trade a chance to do what I think it should do, which is take out that sell side that I have marked out at around 23,430 or so. So I'm watching to see, do we remain beneath that inversion fair value gap? And then beneath that, I'm watching these two wicks. And I'm seeing that as another PD array. We don't have a fair value gap in here on this displacement. But if you take midpoint of this wick here and midpoint of that wick, that forms like its own inefficiency. ICT refers to that as an implied fair value gap. So that's something I'm observing. Right now we're trading near the low end of it. Now what the heck, I'll draw it out. Now's not the time to be lazy, huh? So midpoint of this wick comes in at 484.5, which is right there. And then you take midpoint of this wick here, which comes in at 489.25. Right there. So that right there, I'm seeing that as an inefficiency, like a fair value gap. And then you could get your midpoint, your consequent encroachment of that range as well. Now, if we can displace underneath that low, then I'll remove my risk altogether. There we go. I like that. Let's trail some of this down right above the high inversion fair value gap. I would not be interested in the trade anymore if we were to trade beneath that or trade above that inversion fair value gap rather. I would not want to be long. Now, there's different ways you can go about recouping that previous loss. What you can do is you can be a little bit more aggressive with your stop loss placement and lock in $700 that way. If you don't want to take a partial, then that's always an option. But again, I like that sell side at 23,430 as a draw, so I'm comfortable just letting it do what it want to do. And then if I'm completely wrong, if it comes all the way back up for my stop loss, it's okay. I'm not having regrets. I'm not beating myself up. I'm not, I shoulda, coulda, woulda, did this. It's just another trading day. If I'm 0-2 on the day, it's okay. It's fine. A week from now, I will not remember today's trading day. And one thing that I love about this industry, and there's the partial, and previous loss from the morning has been recouped. But let me, not 32. No, sir. Let me adjust this real quick, and I'll finish that point. But, and because I took a partial, I'm gonna remove the risk now, lock in an extra $100 or so. But I always tell, I forgot what I was saying. I lost my train of thought managing my position. Nah, screw it. I think I was talking about having red days or whatnot. We're inside of that fair value gap. And I think I may take another one off there if it gives me the opportunity. That inefficiency here. This candlestick's low comes in at 58.75. So if we print that again, I may take another partial. I'm going to try my stop losses. My stop above this candlestick's high, which comes in at 488.50. So 489.50, one handle above that. So I recouped my previous loss, which was about $700. And now I have 300 locked in. So it's going to be a green day, which is good. And I didn't need to over leverage. We've pyramided the position. And whatever happens from this point on in the trade is of no significance to me. You did your job as a trader. You mitigated your loss without over leveraging, without gambling. And you just submit to it. I'm watching these down close candles to the left here as mitigation. I would want to see us remain beneath that. Then I'm going to get ready to peel another one off if we trade beneath that low. There we go. So I'm going to take another one off there. And now just let the last one do its thing. So London close macro typically offers a retracement or reversal, especially if we did what we did in the morning session. We had a lot of rally higher. First 30 minutes, the opening range was pretty nasty. But for the most part, the opening session, the morning session was higher. It was bullish all morning. Not the cleanest delivery, but it was bullish. So it's reasonable to expect during that 10:50 to 11:10 macro, it's reasonable to expect a retracement or reversal. And it attacks people who trail their stop losses underneath this low and underneath the sell side here. And I got to remember, I'm going to show the daily levels that I'm looking at as well. I didn't forget. This is real money, live account, real funds. I'll show all that good stuff at the end as well. Gonna trail my stop loss above the high of the new week opening gap. Lock in an extra $200 there. Beautiful delivery. Gotta love algorithmic signatures. If you want something to backtest, just backtest that 1050 to 1110 macro for the morning session for like the past month. Observe what we did in the morning. Was it bullish or bearish in the morning? And then what does that 1050 to 1110 macro do? A lot of times, not all the time, especially in trending environments, but most of the time you'll see that macro gives that retracement. Want to see if I can lock in an extra 500 without being too aggressive. So we'll do that. Sell side in the crosshairs. And there she goes, just like clockwork. All right, so daily chart, what I'm looking at is the up close candle here. We had displacement and we have this up close candles. What I'm looking at is I'm getting the quadrants on this wick. So I had the lower quadrant, midpoint, upper quadrant, and then you have the opening price, which is obviously the most sensitive. So when we trade, I'm watching to see, do we have sensitivity at the quadrant levels? And the fact that we failed to reach the upper quadrant, but not just that, we failed to do that at a key time during the day, London close macro, where I'm already expecting a retracement. So upper quadrant here, premium wick, couldn't even get there, displaced lower with the fair value gap. And then that 15-minute buy side I was talking about, 6 p.m. on Sunday, that's the buy side we ran out. And then this that fair value gap, 9:45 on Sunday that I was talking about as well. So we have inefficiency laying above a buy side liquidity pool, trading into a daily bearish order block during London close macro when everybody's making money during the morning. It was time to run against them. And let's show the account. So you can see the business here, over $2,000 on the day, real money. I see a lot of people saying it's paper money because you have brackets, you have the little orange stop loss stuff. You can use brackets when your broker's Trade Station or AMP Futures and maybe a couple of others. So there's the business there. And then there you go. So real money. Hopefully you found this one insightful. And you can see my first loss there. I can't remember if I showed that. Trying to go long, looking for relative equal highs here. But that's the business. Discord members, we have a webinar in 2 hours. So I'm going to get this footage uploaded and get ready for that. And we're back in business tomorrow morning at 9:15. All right? Peace.